Yesterday, you were warned about a potential stock market trap as we saw the S&P 500 snap a 7-day win streak while gold pushes over $4,000. Now, as we come over and look at how the indices fared across the board, the Dow was down 91 points. The NASDAQ was down 153 points. S&P 500 down 25 points, with the Russell 2000 being down 2.65. When we look at advanced initiatives versus declining, overwhelmingly, it was to the bear side, with 67.7% of issues declining on the day. Now, when we come over and look at the sectors across the board, we saw consumer defensives leading the pack up 0.58. But then we look at the laggards out there, consumer cyclicals and technology. So if everything is so good out there and the market's only going to go up, why do we see the XLK coming down today? We can see a nasty bearish engulfing candle. Now, we're starting to see a little bit of curvature in the MACD indicator. Is this a warning sign that we're about to get a much deeper retracement in the stock market? When we come over and look at the heat map, we look at the Mag 7 stocks. We look at Nvidia, Apple, Meta, Microsoft, Google, Tesla, and Amazon. Only Amazon was in the green, and it was only up 0.39%. A lot of people thought with Tesla's big announcement, Tesla would be up today, but look at Tesla, not looking so good. We've already had a retest of the 38% retracement. MACD indicator is crossed to the downside. So now is Tesla setting up a potential A to B equals C to D pattern on the way down? If that's going to be the case, the target would be right near the 50% fib level at about 399.14. Notice this wick that we have on the candle. If it breaks, that will then validate that ABC pattern to the downside. Now, we come over and look at the fear and greed index. We are back over to neutral territory with a reading of 53, which is really no surprise given the price action that we saw out here in the stock market. Now, if we look at this article right here, 3 scenarios that could spook stocks in October, according to a Wall Street veteran. And one of the things it talks about is the AI bubble. And we've been harping about this for quite some time. You say, Mike, you don't know what you're talking about, yada, yada, yada. Look at AMD yesterday, just a rocket ship on the way up. Today, we saw AMD up $7.80, basically forming an inside day. And let's not forget, it wasn't long ago when we seen Oracle with that massive gap up. And now after the news today, we might see Oracle going a bit lower. Notice we're able to break this swing low over here today. However, the buyers did step back up and start buying the dips. So why was Oracle hit at one point today? Well, if we come and look at this article right here, Oracle stock falls after a report showing weaker margin in its AI cloud business. Now, when we scroll down here real quick, Oracle lost almost 100 million from Blackwell chip rentals. And this is a problem out here because they keep telling us AI, 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 AI. Well, guess what? When all these AI companies have deals with each other, basically just patting each other's pockets, is this nothing more than a scheme that at some point is about to come crashing lower? Now, if we look at a chart of Oracle, look at when it fell off a cliff. Big, nasty candles on the way down. Then we come over and look at the volatility index. The VIX was up 5.5% on the session. Notice the VIX, the MACD indicator, is still crossed to the upside. And notice the lows in the VIX. Are they moving higher or are they moving lower? And I think we can all agree they are clearly moving to the upside. Well, going back to the article real quick, about 3 risks out here to the stock market. They talk about the AI bubble, but the first scary scenario sketched out is the possibility that AI investment might be in a bubble. And we saw that with Oracle coming out announcing that $100 million loss. Keep in mind, it was just yesterday that we saw AMD stock soar after the deal with OpenAI, where they said, hey, we're going to use all your chips. We're going to scratch your back. You scratch our back. But what happens when all that starts falling apart? Now, the second risk that we got to worry about is credit stress hits the economy. Now, it wasn't that long ago where we saw one of the auto lenders actually going bust. Now, if we come over real quick, we take a look at the dollar index day. Dollar index, very strong day out there. Dollar index closing near the upper end of the range. However, if we look at the yields right here came right up towards that resistance line once again, rejected on the way back down, at least for the current time. Now, if you're a gold bull out here in the stock market, then you're probably happy with today's price action where gold made a new all-time high. With the way that gold's moving, this is also problematic. This is also showing that there's a lot more concern out there in the market than what you may be thinking. Gold just continues to rip, and then rip a little bit more. Now, when we come over, we look at the SPY real quick today. The SPY, we can see we had that bearish engulfing candle after the fact that we had 3 other potential warning signs out there. We had that hanging man candle, followed by the shooting star candle, followed by kind of like Dragonfly Doji, and then today culminating with a bearish engulfing candle. Now, is this going to be the case where we only come down to the 38% retracement, or are we going to see a deeper retracement, which could even push past the lows from the 25th of September, maybe even coming all the way down here towards 644.09. Now, when we look at this on the 4-hour chart, we've been talking about this time and time again. Notice what we had over here. Look at where the MACD indicator was, where we had previous all-time highs in the market. The MACD indicator was way up here. As we came up and pushed to a new all-time high, did the MACD indicator make a new high? The simple answer is no. That was a clear warning sign out here. Then on the 30-minute chart, notice today we pushed down and now we have that lower level consolidation. Now, is this the bulls just basically taking a pause and getting ready to start accumulating once again the push right back up to all-time highs? Let me know your thoughts in the comment section down below. Now, one of the areas I do want to focus on tomorrow, if we get above value area high at 669.79, we have a minus development area right here. I most certainly want to pay very close attention to. Look at the MACD indicator. MACD indicator is below the zero line and looks like it could be about to flatten now. Could the MACD indicator be about to set up a divergence play, meaning the market ends up going back down again tomorrow, but the MACD indicator fails to make a new low? Now, a second thing we want to look at with the MACD indicator, if we start working towards the zero line and we're still just going sideways tomorrow, watch out, that could set up another leg lower in this market. And you might say, well, Mike, what could get the market to potentially go lower? I want to remind you guys right now, Take Profit Traders having a 40% sale off all their valuation accounts, zero activation fee. Take advantage of this offer. Use code epitome at checkout. Well, if we come over and we look at the economic calendar, we had no news on Monday, no major news on Tuesday. However, tomorrow we do get the FOMC meeting minutes coming out at 2 p.m. So we'll see if there's anything within those meeting minutes that maybe Jay Powell or other Fed officials give us clues on what the future monetary policy is for the Fed. Now, we come over and look at the futures markets real quick. We come over and look at the 4-hour chart and notice we get a nasty bearish engulfing candle. And this is something we're talking about this morning on the live stream. If you guys don't want to miss the next time I go live, make sure you subscribe. You have the bell notifications turned on for all. But we have a low here, higher low, higher low, higher low, higher low, higher low. Today, we finally were able to break down below those levels. Now, keep in mind, we were able to take out the point of control from the prior week. We got within the minus development area from the prior week. Now, the question is, how deep of a retracement do we get on the way back up? On the 4-hour chart, as we're looking at this big, nasty red candle, if we really start getting above 50% of the candle, that's going to increase the probabilities we're going all the way back up towards the top of the candle. But in the event that we do not, and we start to make a turn somewhere in this area, that could set up an ABC pattern to the downside. For instance, if I grab my Fibonacci retracement tool, measure swing high down to the swing low, notice if we grab our Fibonacci extension tool now and we measure the A to B leg, let's say we only do 50% of that move down, we retrace back up towards. That gives us an ABC completion down here at 6719.44. Now, when we come over and we start looking at the daily profiles on the 30-minute chart, notice today on the live stream, we already have this minus development area mapped out. And one of the areas we were talking about in terms of a bounce in this market was this white line right up in here. And how I developed that white line was nothing more than a structure breakdown point from the prior day. I said, highly probable we're going to come back and test that level. Now, the question is, can we get back above that level? That's going to be 67, 66 and a half. If we can, then I want to look for the market to come towards the minus development area anywhere from 67, 70 and a half to about 67, 74. If we start breaking that level, good chance we go to 61.8. And if we make it past that, maybe even up towards the 786. If we start trading above the 786, watch out. We're probably going to make another new all-time high. But in the event that we turn from this area, and keep in mind, the first time we come into a minus development area, we expect one of two things: the market to consolidate or the market to simply reject and go right back down. So as I clear all the drawings off the chart real quick, notice where a majority of the volume took place today. Really anything below 67.70 down here to about 67.48 is where a majority of the volume transacted on the futures contract. So in the event that we get up above this area, it would be very keen to see the market come up here, turn back down, and then look to target that point of control, 67.58. Now, when we come over and look at the NASDAQ real quick, the QQQs, notice today we get that bearish engulfing candle, but look what we've been looking at on the daily chart. Look down here at the MACD indicator. Was the MACD indicator making new highs? Absolutely not. It was not. And today we saw the Qs make a new all-time high and simply reject down. But I warned you guys about this yesterday. Watch out for the potential trap. And I forgot to mention that real quick. As we go back over to the S&P chart real quick, what did I warn you guys about yesterday? We had an inside day. The low was higher than the prior day's low, and the high was lower than the prior day's high. And I warned you guys about this yesterday's video. Whichever way we first break, watch out. That could be nothing more than a trap. Well, which way did we break? Did we break this low before we broke the high? Absolutely not. We broke the high, and then that's when the market simply gave it up and we came crashing substantially lower. Now, here's one of the trades that I actually placed during the live stream to take advantage of that scenario with some micros. I entered right up here, took a target one, and then ran the second target down substantially using Bookmap to identify some liquidity in this market. So now as we look at the Qs, we notice we have that bearish engulfing candle. We talked about the MACD indicator, but look at where we have, all right? 38% retracement is still substantially lower, 590.29. And in the mean point, in between where we are and there, we have a high volume node at about 598.29. This is going to be critical. If we push past this high volume node, it's really going to open door for the market to come down to the 38% retracement, or maybe even down towards the 50% retracement at about 584.53. Anything below that, I'd look at the next high volume node at 580.10. Now, as we look at the 4-hour chart, notice what we have going on. Huge MACD divergence. We had the push down. We came all the way down, filled this gap right over here. Now the question is, do we continue lower or not? When we look at the 30-minute profile, you see that push lower. We had a lot of consolidation being built. Now, is this caused to go higher, or is this going to be caused to go lower in the market? I will say the MACD indicator is down below the zero line. It is starting to flatten out. So we're going to have to wait and see which way we break out of this lower level consolidation. If we break up, well, then I want to target some of these minus development areas, anywhere from 607.5 down here to about 606.92. If we break below that level, then I want to come back over to the daily chart and say, all right, can we make it down towards this high volume node at about 598.39? Now, when we come back over and we look at the futures markets real quick, we can see we had that nasty down candle on the 4-hour chart. Now the question is, can we make it down towards some of these untested point of controls? And I warned you guys about this in Sunday's video and in last night's video. On the weekly chart, we have 2 consecutive untested point of control. Whenever we have 2 or more consecutive untested point of controls, watch out, they become a very high probability target. So I will not be the slightest bit surprised if we get further continuation to the downside. First target being 24,828.75. Now notice today, we barely breached below value area high, and then we reject it out. So the next time we come back down below it, watch out. That's when I want to target that point of control on the weekly time frame. Now, when we come over and we look at the daily profiles on the 30-minute chart, here's the fibs I had drawn out during the live stream. Now, I still think we have a good shot of making a run towards the 38% retracement at about 25,095. We'll see, can we make it up there and then simply turn back down, or do we come all the way up towards the 50% level? When we look left on the profile, notice we have a minus development area within that level as well. Now the 50% level is going to come in right around 25,129.75. Now tonight, if we start breaking below value area low and we start coming up, I then want to go ahead and target the point of control. Then above that, I'd want to target the 38% retracement. Then I'd want to target the 50% retracement. Then above that, we'll see if we hit the 61.8, 786, anything above the 786. Well, then we can look at this high volume node at 25,234.5, but more likely than not, that will break and we'll usher in a new all-time high in this market. But in the event we break value area low and we stay below it, that's when I really want to focus on this point of control at 24,828.75 on the weekly volume profile. Now, if you guys like to see my thoughts on Take Profit Trader, if it's still the #1 prop firm out there, make sure to watch this next video right here.